Hello, welcome to our channel for endless discovery. The global genesis, how the stock market was introduced. The unseen force reshaping economies. Today, the world's economies are inextricably linked by a vast, unseen network of exchanges where trillions change hands in milliseconds. From funding tech giants to shaping national policies, the stock market is a central pillar of global finance. But where did this powerful concept of buying and selling pieces of companies originate? Let's journey back to discover the surprising global beginnings of the stock market. The early seeds of finance, merchants and risk-sharing, pre-17th century, long before stocks, as we know them, early forms of risk-sharing and capital pooling existed. In medieval Europe, influential merchant families, particularly in Italian city-states like Venice and Genoa, pioneered methods like the commenda, a partnership for specific voyages, or rudimentary bonds to fund civic projects. Antwerp, in what is now Belgium, became a significant trading hub in the 15th and 16th centuries, where merchants would gather in bourses, a term still used for exchanges today, to trade goods, bills of exchange, and even government debts. The revolutionary concept, joint stock companies in the age of exploration, the true catalyst for the modern stock market came with the immense financial demands of the age of exploration in the 17th century. Undertakings like establishing large-scale overseas ventures and embarking on lengthy, perilous trading voyages to distant lands required capital far beyond what any single person or even a wealthy leader could provide. The solution was the joint stock company. The Dutch East India Company, VOC, founded in 1602, became the trailblazer. Granted exclusive trading rights for lucrative trade with Asia, the VOC was the first company to offer shares to the general public on a continuous basis. This meant anyone could buy a share of a ship or a trading voyage, becoming a part owner of the company itself. Crucially, these shares could then be bought and sold by other investors, even before a venture yielded its returns. This created a secondary market, the very essence of a stock exchange. From informal hubs to formal exchanges, Amsterdam, London, US and beyond, the success of the VOC's tradable shares rapidly led to the need for organized trading places. In Amsterdam, open areas like Dam Square became bustling, informal marketplaces. By 1611, the Amsterdam Stock Exchange was established, widely considered the world's first formal stock exchange. Here, investors could truly speculate, not just on a company's future, but on the changing value of its shares. In London, a similar evolution occurred. Brokers and merchants initially gathered in coffee houses, exchanging news and deals. This informal network eventually led to the more structured London Stock Exchange, formally established in 1773, becoming a global financial powerhouse. Across the Atlantic, the United States saw its own nascent market develop. In 1792, a group of 24 brokers in New York famously signed the Buttonwood Agreement under a buttonwood tree, laying the foundation for what would become the New York Stock Exchange. Global expansion and enduring legacy. From these European roots, the concept of the stock market spread globally, evolving with each era. The Industrial Revolution of the 18th and 19th centuries was largely financed by capital raised through stock markets. The invention of the telegraph, then telephone, and eventually computers, revolutionized trading speed and accessibility. From simple pieces of paper representing a share in a ship, to digital transactions across continents, the stock market's introduction was a pivotal moment in economic history. It's a legacy of ingenious solutions to funding big ideas that continues to shape our world. Join us next time as we uncover more incredible stories.